Hi everyone, welcome back to my channel Trade and Travel with SK. Um, Today I am going to discuss about another potential stock which you can consider in the future, uh, I mean in the coming days. And the company name is Ashok Leyland, and I am sure all of you will be familiar with Ashok Leyland, right? Um, the company is a large cap company with a market cap of 67, almost 68,000 crore, and it's an automobile company, right? And they are mainly into domestic, medium, and heavy vehicles segment. So this is the screener page for Ashok Leyland. Now, today I will discuss about the fundamental analysis of Ashok Leyland. Um, I will cover what all things you need to look uh, uh, for when you are looking for an opportunity to buy a particular stock, right? Basically what all I will look, that part I will cover today. um, I will also touch upon little bit technicals because I use technical analysis to find out the right entry and exit for any stock, so I will touch upon that as well today. Okay, so let's get started. So as I said, Ashok Leyland is a large cap company with around 68,000 crore market cap. And first thing I will look how is in general. So this here you can see a lot of data in this. I look few parameters importantly. So first I will check the ROCE and ROE. So both looks good numbers. And then I will look the debt to equity. So the debt to equity is on the higher side, so which is one of the concern. And so mainly I look these two things, the ROE, ROC, and the debt to equity. Then I will come to the financial parts directly. So I will look first the quarterly result. Again, I will not look the numbers in isolation. Majorly, I will look and see how is the trend. So as you can see, the quarterly results are available from March 2021 to March 2024. So roughly more than 12 quarters. Yeah, 3 years roughly, right? So you can see the sales numbers. So that sales numbers, I could see in general an increasing trend. So that's what I will prefer. So any company, when you look, you mainly wanted to see whether the sales are consistent or in an improving or increasing trend. That's how you should look. Why consistent? There will be few companies where quarterly sales will be having lots of ups and downs. So what does it say? That company belongs to a cyclical business. The issue with a cyclical company is that you need to time very well to make profit out of it. So if you are not very good on timing the stock, better avoid it. So this company, if you see, the sales are in an increasing trend, mm, especially in the recent quarters. So especially last 1 year, I would say. Now the second thing I will look how is the profit trend, because even if the sales are consistent or increasing, there is a chance that the operating profit is not following the same trend because of the expense, right? So here again I would see I am seeing the uh, consistent or improving trend, especially starting from here, right? So you don't need to look last 4 5 years of data, even 1 to 2 years data. If it shows that trend is good enough for us, because we are a swing trader and we are not trying to look or hold the stock for quite lot long period, right? Yeah, so the operating profit also is consistent or improving trend. Now, third important or the most important thing is the margin. So again, the margin also has to be either consistent or improving trend. and again I see it consistent, and in the recent quarters, very good improving trend. So why operating profit margin or margin in general is important? Because that shows how efficient the company is. So if the operating margin looks increasing or consistent, at least it shows that they are able to control their expense and convert the growth in the sales as profit. Okay, so sales, profit, and margin. Then the other important thing is, yes, net profit. Yes, again, net profit is also has to be consistent or improving trend. So this is operating profit margin, and there will be a net profit margin. So which comes after subtracting the tax and all. So both are important, operating profit and net profit margin. And the final profit also has to be consistent or improving trend. So you can see that's how it is in the recent quarters, right? And then I will also give an importance to the tax percent. Why it is important? It shows the company is paying tax properly, and very good tax percent also indicates that the numbers which the company reported are not manipulated, because they are paying tax, which means they have audited their numbers, and that is also an important consideration. For example, if the company, let's say, announce company has given very good results, but let's say tax is on a very low, small level, it has its own risk associated, because there can be chance of manipulation. So please also look the tax percent. Yeah, so mainly over here, I will look the sales, especially the sales trend. I will look the operating profit trend. I will look the margin trend and the net profit trend. All I will look is the trend. The trend should be consistent or improving. That's the key. Okay. Now coming to the yearly numbers, same thing. I will look the sales. Yes, sales here, for in the case of Ashok Leyland, sales are keep improving, right? In the recent years, last 3 years or 4 years, if you see, consistently improving, right? And operating profit also increasing. The margin is also increasing, right? And then profit before tax, yes, last 2 years improved. Tax percentage is good last 2 years. We don't need to look last 10 years, even 2 3 years should be good enough, right? Net profit is increased last 2 years, and yeah, they also give good dividend, which is also a good thing. So these are the things you can also focus, because there are a um, lot of points, right, in the fundamental analysis, and each points can lead to each to different conclusion. So you may get confused. That's why I didn't choose each and every uh, points here. I have chosen only the very important things, which are sales, margin, profit. And then you consider the tax part. You also consider the debt to equity ratio, which shows how much debt the company has compared to its equity, right? It should not be on the higher side. I would say maximum one. In case of Ashok Leyland, that is the one risk I would see. The debt to equity ratio is 4.5, which is much higher than 1. So that is one risk, I would say. Okay. So now let's see what are the other things I will check. I will quickly have a look of here, right? The return on equity. My target is it has to be minimum 10%. So if you see, last year it is 29, 3 years 16, 5 year 10, and 13 on 5 years 10%, and 10 years 13%, which looks decent to me. Yeah, I roughly looked the balance sheet, especially the equity capital, to see if there is any dilution. And I will also see how's the borrowing. So here I see borrowing has increased, which is one of the reason the debt to equity has increased. So which is a concern. Cash flow is also important. I will cover this in another video. Yeah, there are, you can see lot of parameters, right, which are important. But as a first, when you get a company, when you want to look first cut to see whether the company is a fundamentally good company, what all things you need to look. That's what I am trying to cover, not all the points. Then another important thing I will consider is the shareholding pattern. So the shareholding pattern, as you know, every company has to disclose its shareholding pattern at the end of every quarter, which shows what is the promoter holding, what is FII's holding, what is the DIA and other holdings, right? Everything in terms of the percent, meaning out of the total equity capital or the number of stocks, each of this category, how much percent they are owning. So you can see from June to March, the promoters are actually keeping their stake intact, which means they are not selling and uh, converting into money, right? And you can see FIIs. Again, you don't need to look from June. Let's look last 4 quarters here, right? You can see the FIIs are increasing their stake. It was 16.59 and they increased to 21.45. DIS has reduced it. Yeah. And others I don't really look. I will look what FIIs and DIS are doing, or how is the shareholding pattern of theirs. So I see FAs are increasing, but DIs are decreasing. So which means whatever share held by the DIs are moving to FAs. The best trend could be both are increasing, because why it is important is FAs and DIs are fund houses. They have a lot of capability to go in detail to the company, analyze them very well, and take appropriate decision on entry, exit, and holding or selling the stock, everything. If they are increasing, which shows confidence, their confidence in the company, and that is a very good sign. So here I see some divergence between FIAs and DIAs. So that's all on the fundamental analysis side. So if everything, so if majority of them are looking good, uh, see it is very tough to get you a fundamentally everything looking good kind of company. Very. I mean, in the Indian equity, you will find very rarely those kind of companies. They will have either one or two numbers or parameters looks bad. Some of them looks very good. All this combination. So you need to understand the risk involved in each of them, and then take appropriate decision. So okay, now coming back to the technicals, right? Just to see how is the price, what price currently, and how is it moved in the previous month, week, month, or years. Yeah. So this is the price chart of Ashok Leyland. So as you can see, I have put monthly chart, which means each candle represents 1 month. Okay. So let's see. First, let's see how is the stock moved, right? So I will start from here. The year 2018 April price was at 150 levels, and then it started moving into the lower direction, and during COVID time it has even touched 40 levels in the year of May 2020. After that the price started moving up, and then it came very close to the previous high, but again it has consolidated and it almost touched the previous high, but it could then cross that. And because this is logically I mean, it is a previous high, right? So you can expect a lot of selling activity when the price come very close to it, and that's what is seen here, right? It took roughly starting from say October 21 to even see around 2 years of time it took for the price to cross the previous high, and in 2023 June price has moved up from this, right? Again price has consolidated around I would say around almost an year. So this was June 23, and next very good up move happened in this year April. So what I am trying to say, this previous high which was in April 2018 150 levels has crossed very well, I would say significantly well in this April, because the April closing price is 192, which is 30%, right? 30% of appreciation in 6 years, not significant. So that's why I said April is this also, actually June also, June 23 also price has gone up. It has crossed the previous high. Yes, I agree. But we are in 2024 now. So when we look back now, even April price closure is also very good compared to May 2018 numbers, which means what? We are at the breakout level, right? So we have a very good opportunity in front of us to enter into the stock because the stock started moving up. I have also shown the monthly time frame trend line. You can see how price has formed a beautiful monthly trend line, right? Which is around I would say 3 years time frame. Yeah. So this trend line has broken in May, which is last month. And in June you can see the price last week has came to the starting of the monthly candle. So you had a very good opportunity to enter as well. So yeah. So now we are currently the price is at 231 levels. So is it a right entry point? I still say yes, because as I said, the price has gone out up from the 2018 levels in 30% above in April, and May candle even broken around 3 years of trend line. So we are still not wait. I mean we are still not behind to for the entry. If you see any opportunity to enter between current price to say 195 or 200 levels, still you can make a lot of profit. This is not a recommendation as such. This is just the analysis part of it. You can take your own judgment. You can read about Ashok Leyland and understand more about the company. But I am trying to say, based on the fundamentals and based on the technicals, the company has a lot of potential to go up. I will tell you one more supporting point. Okay, let's come. Okay, so you may think the price has significantly moved up. Say, yeah, take this point. 147 it was in May 23. Assume 150, and in 1 year time, 150 become 225, let's say, which is 50% up. Isn't it not costly? Okay, let's check. So let's check the May EPS, right? So March 2023 EPS I will consider as the EPS for May 2023, which is this month, May June, right? So the EPS was 4.23. What is this EPS now? 8.46. Doubled in EPS. Did the price doubled? No, price has only become 50% up. So what does it say? The price appreciation has which came till now is not because of PV appreciation. It is due to the EPS appreciation. That too, EPS appreciation, full appreciation has not came into the price yet. So consider this as well and analyze by yourself and then take a proper decision and enter and monitor and yeah. So that's all for today. Hope the video is useful to you. If you like the video, please press the like button. If you have any comments, please provide it in the comment section. Please subscribe my channel so that I can come up with uh, useful videos like this. Thank you so much.